Michael Saylor is dead. Dead wrong about Bitcoin. Now that I have your undivided attention, let's talk about what Michael Saylor has been saying about Bitcoin, the things he gets right about it, and also some of the things where I disagree on him about Bitcoin. Now, of course, Michael Saylor has been a pretty prominent figure in the news in the last few months. He is the CEO of Microstrategy, which has been accumulating Bitcoin at a very fast pace. In fact, the company now owns over 1% of the total Bitcoin supply. Of course, with Bitcoin recently breaking all-time highs, Michael Saylor is being hailed as a kind of visionary. Now, there's many things that Saylor has said that are true about Bitcoin, but I also think that he gets some things wrong, especially when it comes to what he views as the potential top price for Bitcoin and perhaps the long-term implications of this technology and cryptocurrency. So first off, what does Michael Saylor get right about Bitcoin? Like many long-term Bitcoin enthusiasts, Saylor sees Bitcoin as a form of digital gold, but maybe even more. To quote his own words, Bitcoin is a nation-state resistant cyber network. Now, this is a great way of explaining in a few words why Bitcoin is such a key development in technology and how it's going to revolutionize the world, and also explain why it's going to really appreciate in price. That a lot of the things that make Bitcoin so appealing is the fact that it mimics gold in many ways. It has a limited supply, and mining it becomes increasingly hard with time. However, the introduction of Bitcoin technology is what takes Bitcoin to the next level. Through blockchain technology, what Bitcoin has managed to create is a decentralized ledger that is controlled by all the parties involved. In other words, it is a peer-to-peer system. Now, thanks to the way Bitcoin is mined and the computing power that this requires, this makes the network censorship resistant and it makes it impervious to almost all types of attacks. This is why anyone can own Bitcoin, safely store it in a private wallet, of course offline, and basically verify their ownership of the Bitcoin, have complete control over it, and store their wealth in this way. Now, this is actually, to be fair, something that gold doesn't really have. Now, while it is true that gold can be stored and kept, it is a lot more costly, and this means that there's also many problems with verifying ownership, especially if, for example, you buy a gold vault overseas. You may have a claim on that gold, and that is the case also with a lot of gold ETFs. You don't actually necessarily own that gold. Owning gold physically and having it in your possession is pretty hard, which is not the case with Bitcoin. This is why Bitcoin is arguably a very good investment for nation states trying to accumulate wealth. Now, in the past, nation states have used gold or treasuries, for example, to store their wealth. However, there are limitations to buying gold, and as we know very well, the appeal of treasuries is also going down in recent years. So Bitcoin is coming up as a potential alternative to this. Now, as Saylor also points out, in a digital world, it is important to hold digital assets, which is something that Bitcoin allows us to do. So, for this and many other reasons, I do agree with Michael Saylor that eventually we will see Bitcoin become a much larger part of the treasuries held, for example, by corporations, such as Microstrategy, which is of course leading this cause, and even nation states. We have, for example, El Salvador, which is already heavily accumulating Bitcoin and trying to use it in daily transactions. This is because Bitcoin and the Bitcoin network is a decentralized way of easily verifying transactions and storing wealth in an asset that has a limited supply. By 2034, we know that 99% of all Bitcoins will have been mined. However, this is where I disagree with Michael Saylor. Look at this interview with Lex Friedman.
So I would think it goes from 10 trillion to 100 trillion as people start to think of it as digital property.
What does that mean in terms of price per coin?
At 500,000, right? That's a $10 trillion asset. At 5 million, that's a $100 trillion asset.
So you think it crosses 1 million, it can go even higher?
Yeah, I think it keeps going up forever. I mean, there's no reason it couldn't go to 10 million a coin.
In this interview, Saylor discusses the potential price for Bitcoin, starting by comparing Bitcoin to gold, but also discussing how Bitcoin could absorb different derivatives markets and how its market cap could grow into the trillions. Basically, Saylor says that there is no limit to the Bitcoin price, citing as aggressive a price as $5 million per Bitcoin. While ultimately it is not impossible to reach $5 million per Bitcoin, and I'll discuss why in a minute, I do think that Saylor's vision isn't quite right. The way I see it, there are two possible ways moving forward. Either Bitcoin becomes a standard of value and we define our currencies in that value, kind of like we had the gold standard back in the 18 and 1900s, or we continue with a hybrid system where we have fiat currencies, but Bitcoin serves to store wealth. which I believe is a more likely scenario. If all wealth did eventually end up being defined in Bitcoin, we would have to undergo a very big deflation. Therefore, I don't think it is accurate to say that all these derivatives markets could translate into a higher Bitcoin market cap, simply because all these markets exist because of the current fiat system that we have. It is the fact that we have floating currencies and, in a way, such tampered financial systems which allows for these trillions of dollar markets to exist. If we did in fact have a Bitcoin standard, these would not exist, and what we'd actually see probably is a very big deflation, so to speak, before moving into that Bitcoin standard. However, where Michael Saylor may be right, though I think his words are a little bit misleading, is when he talks about Bitcoin as an inflation hedge. Now, because of the current dynamics we are seeing in the fiscal picture and the current long-term debt cycle, it is very likely that the world is entering an inflationary period. Currently, the world is centered around the US dollar, and I expect this will continue for some time at least. However, we are starting to see how the long-term debt cycle is beginning to unravel. The US is beginning to struggle to find financing. Foreign countries are no longer buying treasuries, and what I think will happen is something kind of similar to what we saw around the 1930s and 40s. The Federal Reserve will have to keep rates artificially low in order to be able to finance itself. Therefore, it's likely that we will see higher than expected inflation with lower rates. Now, this high inflation is of course good for the governments because it basically acts as a debt jubilee, meaning that the value of these debts is cut and therefore in nominal terms you are paying back less money for this debt. It's basically like some of this debt is being pardoned. However, this happens of course at the expense of currency holders that see general prices rise. Now, the way to avoid this is of course holding real assets. Gold for a long time has done very well to keep its wealth. Of course, we also have things like oil and real estate. Now, in my opinion, Bitcoin will soon become another great hedge against inflation, especially as we see more companies and countries begin to accumulate it. Now, to this extent, I do believe that we will eventually break out of the Bitcoin cycle as inflation begins to get out of hand. When a lot of people think of the price of Bitcoin, they think of Bitcoin defined in US dollars. But look, for example, at the price of Bitcoin defined in Argentinian pesos or other currencies that have been devaluing over the last few years. As we can see, Bitcoin has done very well to act as a hedge against devaluation, and it's very likely that as inflation gets out of control, we'll see Bitcoin continue to climb. However, if Bitcoin does reach 1 million or even 5 million, that won't actually mean that you will have the kind of wealth that 5 million represents today. This will be, of course, a devalued form of wealth. It will mean that you'll be able to protect your assets and wealth through Bitcoin, but it doesn't mean that owning one Bitcoin will make you a lot more wealthy. With that said, of course, as you know, I've been a long-time cryptocurrency bull. I myself own some Bitcoin and many other currencies. So if you like this kind of content on cryptocurrencies and macro, go ahead and subscribe to the channel. You can also check me out on Substack. I do a lot more there, macro research, in-depth stock research. And remember that I also have my weekly podcast on the Pragmatic Investor. So thanks for watching, and I'll see you in the next one.